Hi everyone, Erica here with Paragon Accountants, CFO and tax strategist for individuals and businesses. Today we're going to talk about one of the most common questions I get asked in my office, how to avoid an IRS audit. So, with tax season coming up now, we need to really think about how we prepare just in case we get an IRS notice. So before I begin, why don't we talk about the types of IRS notices that you would receive or audit? So number one is correspondence. Now this is the most common IRS audit out there. Roughly about 77% of all audits are via a corresponding audit, otherwise known as a mail-in audit. And if you get one of these, you shouldn't worry, because really what this means is that the IRS has a question on something you reported on your individual or business tax return and just wants some supporting documentation to verify that that item is in fact a legitimate deduction. Next, we have what's called an office and field audit. This is much more serious and there is a ton of scrutiny. So if you get an IRS office and field audit, you should be calling my office so that we can help you navigate this process. But not to fear. What this is that the IRS is concerned with maybe some debits or credits you're reporting on your tax return, both business or individual, and your lifestyle. So they're going to dig deep, request numerous documentations, and as long as you provide those documents within a timely fashion, you shouldn't have to fear. And trust me, once you go through this office and field audit once, you'll learn and know the importance of preparing with your record keeping for years to come. Now, lastly, we have what's called a CP 2000. And this is technically not an audit, but it is an IRS letter that is in relation to some type of discrepancy that what you have on your tax return doesn't jive with what a third-party individual or business is reporting against your Social Security number or EIN number. So if you get that CP 2000 notice, again, don't fear, just respond in a timely fashion with the supporting documentation and the item should be closed. So now let's dig into what may trigger an audit. Now I say may because there's no magic 8-ball. It's more about statistics. So when I say statistics, think about this. Most of us now have a mandated e-filing of our business and individual tax returns. That means that the IRS is collecting data on all of us to identify statistical norms. If you fall outside or within those norms, that may trigger an audit. So what I do in my office with individuals and business clients is I look at their historical tax returns, see if the flow of revenue and expenses and deductions seem to be in line with what they've done in the past. Now, that doesn't mean that you can't make more revenue or have additional deductions. All it means is that when there are spikes in revenue from year to year, we should be prepared to defend that. Another item that may trigger an audit is deductions. We have to be mindful that our deductions that are increased are proportionate or may be proportionate to our increase in revenue. So think of it like this. If I have a client coming in who's reporting $100,000 in income for the year and is deducting charitable donations of $75,000 in the year, guess what? That person is most likely going to get an audit. The reason behind this is that the proportionate revenue to deduction somehow doesn't make sense. So we have to be mindful. I'm not suggesting that you don't take the $75,000 charitable donation. We just need to have a defense and supporting documentation should you get audited. Now, the next trigger for an audit is claiming business losses. Now, with the current economy in 2020 behind us, the IRS is experiencing a lot more losses in businesses, but that doesn't mean that they are not auditing business losses. What that means is that if you do experience or have experienced business losses due to the current environment that we have or have continually generated losses, you're more likely to be audited. And why is this? This is because the IRS has a test that some call a hobby test, where they're trying to identify if your business losses are a hobby or a bona fide business. Now, if it's a hobby, there are certain restrictions on the losses that you can deduct against your ordinary income, which is why it is important and why you need to meet with someone like myself to make sure you understand whether or not your business is a bona fide business or in fact a hobby. The next common audited deduction is a home business office deduction. Now, this is allowed by the IRS, but there are specific rules on how you take that deduction. Many clients that come to us that are new clients, what I find is that their business use of home deduction is a little too aggressive and may trigger an audit. So what we like to remind our clients is that we are the experts. We see clients similar to your tax return coming in and out of our office throughout the year. We're going to identify if you fall, again, in those statistical norms to avoid an audit. And if you're going to take an aggressive approach, that it's reasonable and defendable. That's what we're here for, to make sure that if you do get one of the IRS audit letters that we just discussed earlier in this video, that you're prepared and are not concerned with the questions that the IRS may be asking you to defend. Now that we've talked about some of the most common audit triggers, let's talk about how to prepare in advance so that should you get one of those letters, that you feel comfortable on responding with or without a tax professional. Number one and most important is good record keeping. If you can't afford a bookkeeper and you're doing it yourself, keep your records. I recommend 5 to 10 years because the IRS can come back, and make sure that those records are detailed. You have an explanation as to the business purpose and the use of that business purpose for your business, or the credits used on your individual tax return. Secondly, I do recommend, if you're starting to question some of the deductions, credits on your tax return, it may be time for you to hire a professional. A hired professional like ourselves will help build ease in the process so that you feel confident that what you're filing on your tax return has been reviewed. So to close up this video today, I'd like to say that no one likes an audit. Of course, not even myself. But fortunately for us, the IRS only audits about 1% of all tax returns filed. So what I'm here today to share with you is to not be concerned. Make sure you have a professional at least reviewing your tax return or record keeping, maybe once or twice a year if you can't afford someone in-house full-time or quarterly. And know that as long as you have a professional on your side helping you guide through the process, that you shouldn't be weary about an audit. Just respond, don't delay, and don't let it sit on your table for months and months, because the IRS will build penalties and interest if you don't respond. Thank you so much for listening to this video. I hope you enjoyed the information. Please subscribe to our YouTube channel, like us, share us, and we'll talk soon. Thanks again, Erica with Paragon Accountants.